Order blocks. If you have been diving into smart money concepts, you have probably heard of them. They are a powerful areas where big players in the market leave footprints. But here's the real question. Why do some order blocks work perfectly while others get completely ignored by price? To answer this, we have backtested over 100 order blocks under different market conditions, and the results were eye-opening. We found that high-quality order blocks have specific characteristics that make them more reliable. And if you know what to look for, your win rate can increase dramatically. So, in this video, I'll break it down into two parts. First, I'll explain the basics of order blocks and a simple trading setup we tested. Then, we will dive deeper into the conditions that make order blocks high probability zones, so you know exactly when to trust them and when to avoid them. If that sounds useful, make sure to drop a like for the YouTube algorithm and subscribe if you are new here. Let's get into it. Alright, let's start with the basics. An order block is simply the last candle before a strong impulsive move. That's usually when institutions make their big decisions. There are three rules to spot a valid order block. It must create inefficiency, meaning a strong one-sided move with gaps or imbalances between the wicks. It must lead to break of structure or a change of character, basically showing us the market is shifting or continuing with strength. It must be unmitigated. Order blocks are usually one-time use. Once price taps them and reacts, the edge is gone. Now the next part is how do we trade them? The setup we tested is simple. Identify a valid order block, place your order at the start of the zone. Stop loss goes at the other end. Target 2R, that is 2 times of your risk. We tested this 100 times on the Bitcoin 1-hour chart for backtesting. Here are the results. 28 trades never triggered, 41 trades lost and 31 trades won. That's a 43% win rate, not amazing, right? But here's the kicker. With proper risk reward, the account still grew up by 47%. This shows us that order blocks works, but only under certain conditions. And this is where things gets interesting. Through backtesting, we found repetitive patterns that increase the success rate of order blocks. Let me share the most important ones with you. Market structure matters. If you are trading order blocks inside a messy range, your chances drop. But in a clear trend, order blocks have a much higher probability of working. For example, in an uptrend, price makes higher high and higher lows. If you see an order block that aligns with that trend and it's fresh, it's much more reliable. Also watch liquidity. Sometimes price dips below equal lows, grabs stop losses, and then reacts perfectly from that order block. That liquidity grabs makes the order block stronger. Second is volatility and timing. Most winning trades happens during the high volatility, means London and New York sessions. Meanwhile, Mondays and Fridays were less reliable because liquidity was lower. So, trading order blocks in the middle of the week during active sessions give you a clear edge. Third, freshness of zone. The fresher the order block, the better. If price spends too long before revisiting it, the effectiveness drops because supply and demand have already shifted. Fourth, the lower time frame confirmation. This one is huge. Instead of blindly entering when price touches the zone, wait for confirmation. For example, a change of character on a lower time frame, a mini order block forming inside the higher time frame zone. So, to sum it up, order blocks are powerful, but they are not magic. By combining them with structure, liquidity, patterns, volatility, freshness, and lower time frame confirmations, you can turn them into high probability setup.